Well, good morning, everybody. The time has come. 10:30 has arrived. I won't be giving my welcome speech until after our first spotlight. So the first spotlight today is from one of our supply members from Domino. So you may want to put your volume up on this. The audio is a little bit quiet on this video, but our first supplier spotlight from Domino.
Hello everybody and welcome to our second presentation at the SPA. This month we will be focusing on why digital. So, why digital for Corrugated? Often on these slides you'll see people talk about no plate changes, reduced lead time, lower minimum print quantities, reduced waste and reduced operational costs. All of these are true and all of these are big benefits to digital. However, what I'd like to talk about today is how digital is creating new market opportunities in areas such as e-commerce, where using digital technology people are able to do weekly promotions and differentiated unboxing experiences, all of which are products that couldn't be manufactured before at a cost-effective level. And also, interestingly, an increased selling price. One of the things we're seeing from our beta sites, both in America and in the UK, is that we are seeing a vastly increased selling price for the product over conventional flexo experiences. But please, don't just take our word for it. Here are some words from Finn McDonald, the president of Independent 2 in the United States. If we can get more jobs produced daily, we win. If we can reduce our speed to customer, we win. When our customers initiate or convert to digital, we win. Thank you very much for your time today. Should you require anything further, please feel free to reach out to me on the information below.
Well, welcome everybody. Welcome to this, our third online conference. A little bit different to a physical conference, so please be patient with us. It's quite a technical and logistical undertaking. So if there are any quiet moments or slight pauses, please be patient. We'll be shoehorning regular conference content into this 1.5 hour Zoom call today. Special welcome to those of us who are joining on a try before you buy membership basis. Lovely to see you all, and I hope that next time we meet, we will see you as members. Now, cast your minds back to last February if you can. Seems an awful long time ago. If you told me last February that the world would succumb to a global pandemic, that we wouldn't be able to meet in person at conference, we'd be confined to our homes unless designated as key workers, and the government would actually pay us to stay at home if there was no work for us. We would have to wear masks and keep 2 meters apart from others, including family members, and hundreds and thousands of people would die from this mystery virus. If you'd have told me that, last February, I would have accused you of having a very morbid and twisted sense of humor. But it happened. And if you were to say to me last February that 12 months on, we would have formulated and licensed a vaccine in record time, and that over 30 million people would have received their first dose in the UK, that demand for boxes would go through the roof during this pandemic, lead times would be counted in months and not hours, and that cardboard would be in such scarce supply that it would be referred to as beige gold in the press. I would have booked you into the funny farm myself if you'd have said those words to me. But yet, here we find ourselves, here we are. And because of that, the SPA committee have had to work rather hard in the last 12 to 13 months. We've been running fortnightly Zoom calls for all members to share best practice and experience and help one another through these difficult times. We've had regular business and COVID bulletins from BAYS and government. We've improved our reach and increased our online presence through social media. We've fundamentally changed the way we communicate with our members due to the amount of vital information we now have to disseminate. We reissued the SPA contracts of employment and policies. We've launched a new BRCGS support initiative for all members. We've engaged with SBR Consulting to be the SPA's retained sales trainers. So, you know, an awful lot has happened in the last 12 to 13 months. Now, my 3 minutes are nearly up. Not my normal spiel, I know. I do have a few quick reminders here, and I've got them written in front of me so I don't forget them. Can I ask you please to refrain from asking any questions or commenting on anything that could be deemed as sensitive under current competition law? Thank you. Also, please feel free to scan the QR codes that will be popping up on the screens from time to time. They will take you straight to the website or the link from the speaker. There'll also be online polls throughout the event, so please take a couple of seconds just quickly to answer those polls. Your feedback is very important. I also urge you to stay connected for the duration of conference because there are some valuable offers to all members towards the end of conference today. Now, we do actually have our first poll question now, and please bear in mind that these polls are anonymous. We don't know who has answered in which way. So please answer the poll that comes up on screen now. And what is your view on the outlook for your business over the next 6 months? Will it do better? Will it perform the same, or will it do worse? If you could just take a couple of seconds to click on those, I will cast my vote. That will hopefully give our next speaker a little bit of a heads up as to what's going on in our industry. We may actually be able to get the result of that poll instantly before I introduce our keynote speaker. So there we are, there are the results. 67% of us think we're going to do better. Well, that is very encouraging. 31% believe we will perform the same, and 2% will do worse. Okay, well, let's hope that those figures play out in real life. That would be fantastic. So our first formal presentation is from our keynote speaker today, Callum Williams. Some of you may well have read his work without realizing he'd written it. He is the senior economics writer at The Economist. Now, I've asked Callum to share with us today his thoughts on how the UK economy has fared during COVID and what the roadmap to recovery looks like and what some of the key indicators might look like going forward. So without further ado, a big virtual welcome to Callum Williams from The Economist.
Thank you very much, Tim. And thank you everyone for having me. I write about economics for The Economist. And of course, over the past year, my writing has been focused largely on the pandemic and the policy response to it. But today I'm going to be talking for the next 20 minutes or so about the UK economy. And I'm going to try and get through as much as I can in that time. I think seeing the results of that survey that Tim just referred to kind of accords pretty neatly with my view of the UK economy. It's kind of 2/3 pretty good and 1/3 perhaps not so good. But overall, basically fairly optimistic. So there's 3 parts I'd like to sort of go through over the next 15 to 20 minutes. One is how the UK economy has fared over the past year. The second is kind of how much damage has been caused to the economy on a permanent basis. And then the third is what's the outlook over the next year and beyond. So I'll start first with what happened last year. Now, of course, as we all know, there was a global recession last year. It was the deepest global recession since the Great Depression of the 1930s. Unfortunately, the UK did exceptionally badly by international standards. So the IMF recently released its forecast and World Economic Outlook, which is the sort of big flagship publication in economics. If you look at what happened in the G7 group of countries, the UK actually was the worst performing G7 economy of all. Its GDP, which is a measure of output of goods and services, fell by 9 to 10%. It's actually quite difficult to measure in a pandemic. And that was actually worse than Italy, which of course was hit hardest by the first wave of coronavirus and went into Western Europe's first lockdown. So I think the question is, why did output in the UK suffer so much? And this is a puzzle that I think that economists and historians will be talking about for years to come. But I think my feeling is there are sort of 2 big things going on that explained why the UK economy did so badly in 2020. The first is to do with lockdown. Now, of course, pretty much every country in the world saw a lockdown of one form or another over 2020. But of course, lockdowns differ. There's different sorts of lockdowns. And actually, there's been a lot of research over the past year trying to quantify lockdowns. And you can actually measure them on a scale of 0 to 100, where 0 is people can do whatever they like, and 100 is no one's ever allowed to leave their home and all travel is forbidden. And actually, what you can do is you can look at each country in the world and say, well, what was the average strength of their lockdown over the past year from 0 to 100? And at the very top of the list, you've got Peru, which I'm sure a lot of you will know has suffered greatly from coronavirus over the past year. But not that far below and above any other rich country in the world is the UK. And we've had some of the biggest restrictions, and also crucially, the government messaging over the past year, rightly or wrongly, has been mainly about controlling the virus rather than about the trade-offs that exist between the virus and the economy. Even if you go to France, for instance, and you listen to the government messaging on coronavirus, there's much more emphasis on the pros and cons of restrictions. But here, rightly or wrongly, they've chosen to be very strict, and as a result, economic activity has been particularly impacted in the UK over the past year. So that's the first thing. The second thing, which isn't really discussed in the media, but I think is incredibly important, is to do with London. Now, as I think all of you will know, cities, urban areas over the past year across the world have been particularly affected by lockdowns. And there's all sorts of reasons for that. You know, one, they're big tourism hubs. They rely a lot on theatres, restaurants, people coming together, public transport, all that kind of stuff. So really, wherever you look, cities have done particularly badly. Even in South Korea, which has pretty much eliminated COVID, people outside Seoul will look at people who live in Seoul and say, oh, you live in a coronavirus hotspot. It's really that kind of common. Look at what's happening in San Francisco. It's almost entirely emptied out over the past year. Now, the thing about the UK is that it's a very urbanized society and particularly reliant on London, as we all know. And so it sort of stands to reason that if you're a country that is very urbanized and reliant on one big city, and it's also the case that cities have been particularly affected by lockdowns, then your economy as a whole is going to be particularly affected. So I think that's the other big reason the UK has done badly, at least in GDP terms, over the past year. So that's the third, that was the sort of negative third. I'm now going to do the other two thirds, which I think is a bit more positive. So when we're thinking about what happens after the pandemic lifts, I think there's kind of two big things we need to think about. One is how many people are going to be made unemployed over the next year, because of course there's been furlough. Some people think that it's merely delaying the inevitable, and that as we lift restrictions, people are going to lose their jobs in huge numbers. And the second is to do with businesses. How many businesses have gone bankrupt? Because of course, if lots of businesses have gone bust, then people won't have any jobs to go back to. So we'd have a slow recovery. Now, I'm pretty optimistic on both of these fronts, actually. So I'll start with unemployment first. What's happened with unemployment is a lot of economists back in February, March, the sort of time that Tim was talking about in his introductory speech, they feared the worst. They feared that unemployment was going to rise very substantially in the UK, basically because it was being hit so hard, as I've just said. But actually, that hasn't really happened. Unemployment has gone up a little bit on the official measure, but to be honest, had we not been looking for it, we might not have really said much about it. It's done much better than people had thought. Now, some people will say, well, that's because everyone's on furlough, and actually, it's just it's hidden by the furlough, and that is true to an extent. It is true to an extent, but not to as much of an extent as people would think. So, some people have done some sort of clever calculations that say, let's imagine if furlough didn't exist, how high would unemployment be now? And it would be around 7%, which is certainly higher than it was before the coronavirus pandemic. Before the pandemic, it was about 4%, but really nowhere near as bad as people had feared. And there's a few reasons for that. I think perhaps the biggest one is that what you've seen over the past year is that actually lots of new kind of jobs have been created. So consumer demands have changed, and you'll be much more familiar with changing consumer demands than I will be. And so what you've actually had is surprising growth of jobs in sort of new industries, and that's helped to soften the blow as well. I think the other thing to think about is when the restrictions lift, how many people are actually going to be able to return to their jobs. Now, the evidence here from America is actually quite encouraging. Now, for some reason, we're not able to do this in the UK, but there's a study in America that basically says when restrictions are lifted, how many people return to their old job. And actually, if you look at America in the summer last year, at one point, it was about 80% of people were returning to their old job, having been laid off or put on furlough. Now, that if there's any kind of read across from the US to the UK, I think that bodes fairly well. I think that people will return in quite large numbers to their old employer. And in fact, you are seeing that now as restrictions have lifted over the past few weeks. So I'm fairly optimistic on the unemployment front. And what about the bankruptcies front? Again, this was something that a lot of people were very nervous about in February and March 2020. There was this huge once in a lifetime economic shock and what was going to happen to business bankruptcies. Now, this is something that just was kind of amazing really in hindsight, is that a lot of governments back in March 2020 basically said, and some of them were quite explicit about this, we are going to do everything we can to stop firms from going bust. And you had this famous speech from Emmanuel Macron where he pledged that no French business would go bust because of coronavirus. Now in France, business or corporate insolvencies have actually fallen during the pandemic by about 40%, a massive decline. Now in the UK, it's not quite as kind of impressive, but they have fallen by about 10 to 20%. So there hasn't been the surge in corporate insolvencies that people had feared. Now, of course, the next concern is, well, of course, this is just a delayed reaction. As the economy reopens, there's going to be this huge surge in bankruptcies, and I think that there is some truth to that, but I think it will be nowhere near as bad as some people think. If you look at the UK corporate sector as a whole, the cash balances of businesses on average are actually pretty high at the moment, very high, in fact. And that gives reason to believe, I think, that there isn't going to be this massive wave of insolvencies that some people are fearing. So now I'll turn to my third thing, which is really about, I guess, what matters for you folks over the next year or two. What does the recovery look like? Now, just to cast your minds back to the last global economic recovery, which was after the financial crisis of 2008, 2009, it was pretty bad. GDP growth was very slow. Labour markets weren't working very well. Unemployment was high. Wage growth was low, and it just didn't feel very nice. I mean, I'm sure you can all remember living through 2011 when inflation was high, and it wasn't great. I don't think things are going to be the same this time, and there's a few reasons for that. I think what you're seeing in America is that there is a lot of pent-up demand for goods and services. America's a few weeks ahead of us in terms of the unlocking of the economy. And what you've seen in America is that basically because spending opportunities have been pretty minimal over the past year, households have accumulated basically quite large amounts of savings. It's not quite as pronounced as it is in the US compared with here. We haven't quite accumulated as many savings over here, but households are actually sitting on quite a lot of spare cash because they really haven't been able to spend over the past year. And what's happening in the US is that that's driving a pretty rapid economic recovery. And in fact, there's now increasing evidence that something similar is happening in the UK. So there were some figures on retail sales that came out last week. They absolutely smashed expectations. They were well above where people had thought they would be. So I think that bodes quite well. There was also some figures on PMI, which is a sort of purchasing managers index, a sort of high frequency measure of economic activity. And again, that did much better than people had thought. If you look at the sort of history of what happens after pandemic events and after war events, this is sort of the historical pattern, actually. So if you look at what happened to spending after the Spanish flu outbreak of 1918 to 1920, or you look at what happened to spending after the Second World War, it's a similar pattern. Spending opportunities have been very constrained, so people have accumulated large amounts of savings. Things kind of slowly move back to normal, and then people are pretty keen on spending. I think there's a question, of course, and this pertains strongly to your industry, about the extent to which people are going to go back to patterns of behaviour that they were used to before the pandemic, or whether shifts in consumer attitudes are going to be permanent. Now, there's some good research on this, and I think it's true to say that these shifts will be permanent. In particular, the shift to online retail. The UK was already a world leader in online retail, well ahead of America before the pandemic. America's kind of caught up over the past year, but of course there has also been a big boost in the UK, and I think that's something else that's going to persist. Likewise with what particularly food service industries have done over the past year. A lot of businesses have completely upended their business models, and all credit to them for doing so. It's likely, I think, that those changes in consumer preferences are going to change. What you're seeing, of course, in the UK at the moment is the early stages of this boom. So the FTSE 100 and the FTSE 250. I'm particularly interested in the FTSE 250 because that's a better reflection of what's going on in the domestic economy. The FTSE 250 recently reached its all-time high, which is kind of astonishing if you consider, the state of the global economy. So I'm fairly optimistic about that. I think one of the big things, perhaps the biggest thing actually, and Tim, you alluded to this in your introduction, is the question of inflation. Now, this is the biggest issue in economics at the moment. If we cast our minds back to what happened after the last crisis, 2008-9, inflation actually peaked at a very high level in the UK in about 2011. That had all sorts of causes, including a rise in VAT, but it actually peaked at about 5%, so really, really quite high by historical standards, given that the Bank of England is targeting 2%. And essentially, there's a lot of fears, not only in the UK, but in America, and also to a lesser extent in the Eurozone, that what will happen is that people will be spending in vast amounts, and the economy just won't have the ability to keep up with all that extra demand. And so there'll be this big surge in inflation that will be fairly unpleasant. It could be very unpleasant if the Bank of England had to raise interest rates to kind of keep that inflation in check. What we saw last week from the UK inflation figures is there was a surprisingly big jump in the annual rate of inflation in the UK. So there's certainly a sense that something's going on. That's also the case in the US actually. And what happens in the US tends to kind of spill over into what happens in the UK. We're very interdependent economies. Now, I am personally not too worried about something spiraling out of control. And there's a few reasons for that, but I think this is going to get into a bit of economic theory, but it's pretty straightforward, really. The thing that really matters for inflation, well, there's two things that really matter for inflation. One is what happens in the jobs market, and the second is what people like us think about inflation. Now, when jobs are a bit harder to come by, this will definitely be the case in the UK for a while. It's not going to be as good as it was in 2019. That means that workers have less bargaining power in the workplace. And what that basically means is that wage rises are a little bit worse than they would be normally. And if wages are not going up as fast as they might otherwise be, then that won't feed into prices generally, and that won't push prices up. And then the second big thing, which is really important and is it's so simple, but people don't talk about it. It's that what we expect, all of us collectively expect to happen to inflation, is actually really important in explaining when you get big inflationary episodes like what happened in the 1970s. So what happened in the 1970s for sort of complex historical reasons is that how ordinary people like us basically started to think that inflation was going to get really high. And that was basically because the Bank of England was sort of in the pocket of the government. It sort of did what the government wanted it to do, and all sorts of other things like that. And that's one of the, in fact, potentially the biggest reason why there was a big surge in inflation in the 1970s. I just don't see that happening in the UK today. All the survey evidence suggests that most people think that over the next 12 months, inflation will be in the region of 2 to 4%. So maybe a bit higher than normally, but not really that different to how it normally is. And so I don't think we're going to be in a situation where, we have a few nice months of a post-pandemic boom and then we're kind of swamped with inflation. I just don't see it as being particularly likely. I suppose I'll leave you with two more longer term things, which perhaps if there's any questions we can discuss briefly. One is the question of public debt, and the other is the question of Brexit. I'll start with Brexit. I think the economic models are quite clear that Brexit is not good for the UK economy over the long run. I mean, the pandemic, to be honest, is a lot worse than Brexit, even in the long term. I think it's going to do a lot more damage, but Brexit is also bad. I think the thing is, though, is that Brexit, although it's bad, is not destiny. We're not, you know, the path of the UK economy is not 100% determined by Brexit. There are things that the government could do domestically that could really wipe out the effect of Brexit and more. So, I mean, and I think there's evidence here that the UK government is finally talking seriously about two things in particular. One is housing, which has been a perennial problem in the UK economy. I do sense there is a bit of appetite now to build the houses that the UK economy does desperately need. And the second thing that I think is happening, and this is also a big shift in the UK government, is a focus on science and science policy and funding scientific innovation. It's something the UK has underfunded historically, and I do see a change. And so therefore that leaves me, you know, fairly optimistic on that front. And on the public debt front, we have accumulated a huge amount of public debt over the past year. The deficit has not been this high since World War II. I think for reasons related to low inflation, I think interest rates are likely to remain low for the foreseeable future. And that means that the UK government won't have that much difficulty in funding its deficit and in maintaining a high level of public debt. We will need to get to a point where we start to pay that down and to start to right the public finances. I think that will be easier when the economy is recovering, like I think it will. And so, you know, in sum, I think the past year has been very, very hard for the UK economy, as it has for many others. But I think overall, there's room for optimism. So 2/3 optimism, we could say, going back to that survey. So that's all I've got to say. Thank you very much for listening to me. I hope that was interesting.
Callum, that was fantastic. And, you know, you have my thanks. You covered everything that we wanted you to cover. The very fact that there are no questions means you've done it well. And you've run to time, so what more could I ask for? Thank you very much, Callum. And hopefully we'll see you again at one of these events, or indeed a physical conference as and when we can get together. So thank you very much, Callum. That's great. Thank you. Right, ladies and gentlemen, these events don't just happen. They take a lot of planning, and there's quite a lot of cost, believe it or not, in putting these events on. And we can't do those sort of things without sponsorship. So we're very grateful to our two sponsors of this event today. We're going to hear from one of our event sponsors now. Domino are going to, I beg your pardon, BW Paper Systems are now going to give us a spotlight on their business. That was great. Thanks once again to BW Paper Systems for sponsoring today's event. Neil, we're coming to you next, and I'm sure you found Callum's presentation quite interesting. Hopefully it will dovetail into what you're about to share with us. Neil Osmond from Noah Prison, known to most of us, if not all of us, is a regular presenter at these events, and will be giving us his UK corrugated industry update.
Thank you, Tim. Yeah, that was fantastic, and already in our online conference we've had some feedback of how popular that was. So yeah, we hope that we'll have that on a regular basis. Katie, just checking. Thank you very much. So this is my presentation, and much more specific to our industry, and to say that for those people that attend the regular bi-weekly converter meeting, a lot of this information will be familiar with you, but there'll be some additional information contained. So yes, please, Katie. So the first thing is, where did we end up as an industry in the UK? And people will be familiar with these statistics and numbers. And the area I'd like to draw your attention to is we had an amazing end to the 2020, and particularly in November and December. And again, feedback from people at the converter meeting, we could see that things had got tremendously busy in November. And by December, actually, you'd say starting to what I describe as out of hand. But we ended, for statistical purposes, the industry, UK industry, ended up at plus 2.3 ahead of the previous year. A bit like Tim was saying, who would have thought when we were just getting into lockdown that we could have ended up with such an amazing year? So corrugated, robust and resilient. Some of the driving factors towards that, as Callum was indicating, there are certain market sectors that had fared well, certain market sectors that fared not so well, but the ones that had fared well, and people will be familiar with the e-commerce figures that I publish, that e-commerce as a sector in its own right, representing about 10% of the corrugated consumed within sheet plants or supplied by sheet plants, and growing by 9.4%. So an amazing growth there. The statistic for December, if you draw your attention to that, you can see that significantly, the whole of the UK was significantly above what it did the previous year. And within that, the sheet plant sector fared particularly well, figures as high as 15 to 20% growth in the month of December for sheet plants. And where are we going forward in the first part of 2021? Well, that the details in yellow. At Q1 2021 is looking like overall the whole of the UK plus 2.5% ahead, so ahead of where we ended up for the whole of the UK economy for corrugated. But actually the sheet plant sector, it looks like it's plus 8%. And talking with people, that they've described their business as being as high as plus 25 and 30%. So there are some plants are exceptionally busy. Katie, yes, please. So just a couple of quotes, which I think other people can say it better than I can. And FEFCO summarizing the issues that have faced us, and they haven't just faced the UK economy, they've actually faced other parts of Europe, but particularly in the UK, we felt it. So demand that has outstripped what the paper mills can supply. But it isn't just that, and I'll come to that in a second. Not just paper mills being overwhelmed by demand. And the second bit is a prediction by somebody who should know these things, predicting that it's going to be like this at least until May and June. And I've been talking to people and they've been saying that already lead times unprecedented out to July, so of supplies. So we are exceptionally busy, and I remember joining the industry a few years ago, and people used to talk about the bad old days of 1974 when there was restrictions and where paper was not available, and it feels like we're back in those sort of times in terms of paper restrictions and supply. Katie? I said that there were other drivers. It wasn't just paper mills. In fact, far from it being just paper mills. This was, and thanks to Franca for sharing this from the last presentation. Thank her again for the update that she gave me. This was the progression in 2020 of both OCC and the one on the bottom, which is mixed waste. And you can see that mixed waste was rising in price. And by December, it got to £45 a tonne. That price has risen in 2021 to £85 a tonne. So waste paper prices have doubled. So that's an indicator of shortage of supply and huge demand. And it's waste paper that really is the key in all of this. And that's where paper mills get their main product from, the main paper mills. So that's a key thing for us. Yes, Katie, thank you. And really, my summary is the industry in the UK doing well, plus 2.5, sheep plants doing exceptionally well. And the drivers of sheep plants is we're in the market sectors where those companies that Callum talked about, the innovators are in. Mixed waste doubled in price in a very short period of time. Sheep feeding demand much higher than for integrated plants. So integrated plants are busy, sheep plants and sheep feeders are exceptionally busy. Paper pricing pressures therefore go with that. Lead times for sheep boards are incredibly extended at the moment. Corrugated demand prospects remain very positive. So I would say we're in that sector where we're doing very well. And the most important thing I think is it's about customer service and customer care. And please read the raconteur summary in the Sunday Times if you can do about service. It's really important. I think that our industry needs to be able to make sure we service our customers well and they'll stay. There we go. Thank you very much.
Great. Thank you for that, Neil. Brought us right back down to our industry level. Callum made reference in his presentation earlier about innovation and how the government wished to encourage innovation. It sort of leads on quite nicely to our next presentation. We have Andy Royce and Jeff Kaiser from Keen Partners who are going to give us an R&D tax credit update and a little bit more information about HMRC, both their willingness to give and their appetite to investigate previous claims. So over to Keen Partners.
Hi everyone. I'm just going to share my screen quickly before I carry on here to see if you can. Perfect. Yeah, just a big thank you to Callum, as well as Tim's introduction there. R&D tax credits very much leads well into innovation and how the UK government is encouraging innovation. What myself and Andy are going to do is we're going to run through a couple of key statistics, as well as a few key events within the R&D tax credit landscape. The government has set a target to steadily increase R&D spend to 2.4% of GDP. Which is currently sits at 1.6%, so that it's currently, as an estimate, is about 50% increase on the current level. Current claim settlements for the year are around about £6 billion. 70,000 claims should have been submitted for the 2019 period. Of those claims that are submitted, about 85% of those claims are SMEs, and 14,000 claims are new, or of the total claim value, 14,000 are new claimants. Sort of the sector which you guys fall in, the manufacturing sectors, are one of the largest claimants. While HMRC have matched this ambition by hiring 100 more inspectors to reduce turnaround time, the bar has been raised on monitoring and quality assurance. To give you guys some insight, fraudulent claims are estimated at over £300 million. And that increase in capacity has allowed HMRC to review up to 40% more claims than they have in the past. I'd like to hand over to my colleague, Andy. He's a senior R&D tax specialist within Keen Partners, and he'll give us some more insight into a number of those key events that have affected R&D tax credits.
Thanks very much, Jeff. I'm hoping you can all hear me. Good, lovely, and get some thumbs up there, so thanks very much. And yeah, thank you to all the speakers so far, and very kind of you to mention innovation as well. So I think that's particularly important and relevant. I'm just going to give you a quick update on several areas that have impacted upon the R&D scheme. The first of which is a new PAYE cap that's coming in for any periods ending post the 1st of April 2021. Just as an outline of what this will mean, it's one of, as it is there, it means that SMEs, so your small to medium enterprises, this won't apply to the large company scheme, will only be able to claim tax credits worth up to 300% of their combined PAYE and NIC liability, plus 20k. So as a minimum, you will be able to do that. Two noteworthy things on that, I suppose. Tax credit. So if you aren't in a loss-making position and you are just having a repayment of tax, it won't affect you. So it's not designed for that side of things. I suppose, as I said, a minimum, you will still be able to claim 20,000. Why are HMRC doing this? It's probably in response to potentially shell companies looking to take advantage of the scheme and not use it in the right way. The scheme itself is to help more money come through HMRC in the long term through investment in R&D, and some companies that have looked to target with this measure will be taken out of the scheme in this way. However, even though they're trying to target that, it may affect businesses that are still legitimately claiming. So when it's coming in now, pretty much from any period post April 2021, so do look out for that. And I think really the main businesses that will be affected are potentially those who have little in terms of internal staff and do a lot of subcontracting. And if you are claiming and you're in that scenario and you're looking at claiming a credit rather than a repayment, then it's worth reviewing potentially how you're structuring things, but something we can talk about, but just something to be aware of, I suppose, on that. We talked a little bit about furlough this morning, and there's some stats which I'm sure are already out of date. However, you can see the importance that the furlough scheme has had to the UK over the course of the last 12, 13 months. We've seen 11.2 million jobs supported by the scheme since March last year. Circa 4.7 million currently still on furlough. So although it's not in the news as much, it's certainly still relevant for everyone concerned. 40% total of employers have used the furlough scheme or are currently using. And good news in the March budget that it's extended to September 2021. The impact on the R&D claim in itself, quite rightly, if you are on furlough, you can't qualify for the R&D cost during that time. It's not possible to meet the statutory definition of performing R&D whilst you're on furlough. So if you are claiming and you have furloughed staff, then the way we look to discount for that is to just look at the time period that they're on furlough, but you wouldn't be able to include those costs. But it's probably understandable why in that scenario. So that's the CJRS. We've all seen quite a lot about CBILS, so that's the Coronavirus Business Interruption Loan Scheme, and also we have the Bounce Back Loan Scheme as well. Two really helpful forms of government aid or subsidy that have helped throughout this time. What impact will they have on the R&D? So the government has been quite good at offering some clarity here. So if you're in general receipts of grants and subsidies, this can affect how much you can claim under the SME scheme. It will partially limit the relief available. I say partially, it means that those costs will fall under the marginally less generous RDEC scheme, which brings about more like a 10% benefit rather than the more generous 25 to 33% benefit rate you get under the SME scheme. So where it's a notified state aid, they have been clear that both CBILS and BBLS will be a notified state aid. This does mean that any money that you've received and under those schemes and is then spent on R&D wouldn't be able to be claimed under the main scheme. So that's the real headline on that. There is a risk, therefore, if you are spending on a specific project, that all of that project itself will have to be claimed under the R&D scheme, under the less generous RDEC scheme. But there is also advice that we can give on that as well. These were just a few of the relevant for R&D budget points from Mr. Sunak. We can see the CT rate rise from 19 to 25% by April 2023. The super deduction as well will be important, but probably most important, the ability to carry back additional losses of up to 2 million for 3 years. You will see that the 19 to 25% sort of tapered rate will actually increase the benefit rate which you'll be getting for R&D. So that's also an important point there. There will be also consultation as well on potentially raising the RDEC rate. So my quick takeaways for that are, so the CT rates rising will mean a more generous rate of relief actually for R&D. So it's good news on that front, as is the extended loss carryback. If you're looking at CBILS and BBLS, if you are spending that money, do try not to spend it on R&D if possible, because that if you can spend it on anything else, that's much better for your R&D claim. That would be my main takeaway from that. On CJRS, yes, we wouldn't be able to claim for furloughed staff time, but that's something that's probably understandable in the circumstances. So overall, good news in terms of the reliefs and good news going forward for R&D.
Cool. Thanks, Andy. So in terms of opportunities available to SPA members, we do provide members with a preferential rate, and it does include dedicated resources. We have in the past had a number of members that potentially have come to what we call statutory deadlines. We can go back as far as 2 financial periods. So in order to make sure that you can put through a claim, we've had to allocate a number of resources to make sure that we can do this on a last final hour type basis, and we do provide those to the members. Our team is made up predominantly of industry qualified engineers and chartered tax accountants, and also includes an Oxford qualified copywriter. To give some more insights into the service, our inquiry rate is less than 1% and defended at a full 100% value of the initial benefit submitted, which is very, very, very rare. Our agreement is also inclusive of inquiry defense at no additional charge. We recently have launched the enhanced benchmark service. This is a service that we make available to SPA members complimentary. It's just a soft touch review for those members that are already claiming, where we can look at a number of things, say, for example, that Andy has mentioned, just to say, right, are you maximizing the full extent of your benefit? Following the presentation, if you guys would like to reach out, my details are here. I'll also post it on sort of the chat of the conference. You guys can also reach out either on the SPA or Keen Partners website and the social media portal. We have also recently launched a member scorecard service, which in addition to determining whether you qualify for R&D tax credits, also will give insight into other funding opportunities and whether members may or not qualify. Yeah, that's all from our side. Thank you so much for your time.
Thank you. Excellent. Thank you very much, Andy and Jeff. Just reiterate that if you need to know more about R&D tax credits, you need to get a claim underway, go to the SPA website, click on our initiative section, and follow up with Key Partners. They'll do everything for you. So thank you very much for that. We now have a spotlight from our joint sponsor of today's events. As mentioned before, these events can't go ahead without some funding, so we do thank our sponsors for this. So we have Neil Stevenson from IsRevision, and he's going to give us a supplier spotlight. Thank you.
Thanks, Tim. That's great. Thanks, Katie. Yeah, morning everyone, and thanks again for the opportunity, Tim, to present the IsRevision and our 100% inspection system. What I'm going to cover today, next slide please, Katie, is just really working with the benefits of 100% inspection. So the carton star is designed specifically for inspecting lots of different aspects of the print and the quality challenges, I would say, within the corrugated printing process. Just next slide, please, Katie. The vision system basically picks up on missing print, I would say, the main aspects of what we're looking for from a defect, misregistration, And also it really enables countermeasures to be taken before the waste is actually created. Next slide, please. I mean, most of us and most of you, I would say, have experienced claims from customers regarding misprint, missing information that's on the board of the printed corrugated. We have developed and we have now standard in the system what we call is a PDF proof, which is our quick proof. So what we're doing here is comparing a PDF, a customer signed approved PDF, with actually what's printed on the sheet or on the corrugated board. Next slide, please. At the heart of the system is high-speed cameras. These are customly configured cameras. Most of our installations, I would say 90% of our installations are on already installed machines. So a lot of design comes into actually how do we install and configure these systems. But it's a modular concept, and we specifically design the systems for really customer needs. Next slide, please, Katie. Customer feedback. What we'd say most of our customers are experiencing ROI, return on investment, I would say within the first year. And the reason it comes down to mainly is looking at waste, reducing waste. We see productivity increases on average, I would say around 10 to 15%. Our customers, and that's with the printer, with the operator actually being able to do other tasks, and being more confident with the systems being installed that they can increase the speed. So definitely a productivity increase and obviously a reduction in waste. Next slide, please. We have the case studies. I mean, we have this available to any new customers, any customers inquiring. We have the template, the format. We can very easily calculate, ROIs, because we know, most of the figures, most of the numbers that you're working with. And this is just a typical example of what we can work with ISRA and with the customers. So definitely, if you are interested, it's a very quick exercise. We just need some of this information. And we can show you typically on what the return would be having a 100% inspection system installed. Next slide, please. A lot of to do with really sort of job reports. How do we then pass that information? A lot of quality reports, information that needs to be transferred to your customers. This can be stored on your own MIS system. You can create your own independent reports that can be carried with the job and your supply. But again, your full flexibility on what we can do on a reporting system as well. Thank you. That's me, Tim. Thank you very much, guys.
Neil, thank you very much. That was great. And can I formally once again thank ISRA Vision for being joint sponsors of today's event. I believe we have another poll coming up now. Once that one has been dispatched. This one, I won't vote for this one because I'm a little bit biased, but the next poll is, how do you feel the SPA is representing or helping you at this time? Again, this poll is anonymous, so please be as honest and frank as you can, and I will decline from answering that question. Excellent, thank you very much. Well, next up we have a conference favourite. Yes, and he's champing at the bit. I can see he's in the top right-hand corner of my screen. But next up we have Luke Menzies from Menzies Law. He's going to give us his employment law update. Welcome, Luke.
Thank you, Tim. Good to see you all. Welcome, conference. Let me get my slides up on the screen. Hope you can see all those. Welcome. It's always good to give you a 5-minute tour of what's happening with employment law. First of all, just a reminder, here's a picture of the phone on my desk where I sit waiting for you all to call on the SPA hotline. I have my quill pen and my book-lined study, and I am here as your lawyer. So do please use us, and there's of course the email address as well. It's great to work with so many of you, and remember your 15-minute free advice call whenever you need it. Recently I've been advising SPA members on these things, redundancies, little redundancies here and there. Luckily, not anything major or any of your members at the moment. Sick leave comes up all sorts of ways, all sorts of sick leave. It always did, and it always will. We're involved in exiting a manager, in fact, a couple of managers recently, and that has its own fun, depending on what the particular mix is. An ill health dismissal as well recently, and this was a long one when rumbling along. In fact, it had been sort of, I think the ill health had been left for quite a while, not brilliantly handled between two line managers, and then sort of left for a while on the shelf. And of course, these things tend to fester rather when that happens. So always worth getting some legal advice earlier rather than later in these sort of things. So I had my first jab today, hooray! And I'm pleased to say I'm feeling okay, and I don't feel sick looking at a needle. Here's a picture of a needle, which I do not feel sick looking at. It was very, very good. I won't make a joke, Tim, about little pricks and all that, because you made that once, and that's all done, thank you very much. However, what I am going to tell you about is that ACAS have issued a very brief one-page guidance on COVID vaccinations and the workplace. Now, it's actually really quite soft and cuddly, and may not fit with all of your views about how to manage staff, but essentially it says you can support staff to get the vaccine, but it's best not to force them. And I thought if you run a care home or other aspects where you really do need to, then perhaps you do need to force them, but otherwise just do it on a case-by-case basis. And as I think we've discussed before in the converted calls and in a previous conference discussions, generally you're going to get a very cooperative bunch, and if you get difficulties, it's best to explore it sensitively and try and work out what the issues are. And usually you can get around it if you have someone that's having a difficulty with testing or the vaccination. Any discussions you do have around anything to do with medical, whether it's COVID or anything else, just remember that the law requires you to keep this stuff very confidential on a need-to-know basis, even in terms of, does the line manager need to know anything except some absolute essentials? Data protection rules, of course, also apply there. So be very careful with that. Medical information is a particularly highly classified aspect of data protection called sensitive personal data. So be careful. But hopefully you will get through the remaining aspects of vaccinations and testing now fairly smoothly, and I wish you all the best with that. I wanted to highlight workplace mediation today briefly, and this is where usually an external workplace mediator comes in to help you resolve something. They may well be an HR consultant who has also qualified as a workplace mediator. They may be a lawyer who part-time does this. Workplace mediation can be really helpful for dealing with a difficult grievance or relationship breakdown at work. And what's really useful is also it's far, far quicker and usually far cheaper than defending an employment tribunal claim. It can also often be the same amount of effort and cost as you simply dealing with a difficult grievance and a grievance hearing and an appeal hearing and so on. So whenever there's a difficulty, relationship breakdown, a difficult grievance, it's worth thinking whether a mediator may help. There are a lot of them out there, well experienced, well qualified, and not necessarily that expensive. And aiming for a win-win outcome to a complaint or a grievance or a falling out is obviously going to be better than win-lose. In my view, you know, when it comes to negotiations, the benefit of win-win, and it's actually the same in terms of dealing with difficult staff problems. So I'd thoroughly recommend that you look at that. The other thing with workplace mediations is that when an outcome happens, the line managers usually learn some really useful lessons, and indeed the whole management may learn some useful lessons, which won't so often come from simply imposing a grievance decision or, worst case scenario, going to an employment tribunal, because of course you get stuck very much into adversarial, we're right, you're wrong positions, and you don't learn the lessons that could otherwise valuably be used. So bear that in mind. There's lots of workplace mediators out there. If you get your employment law or HR advice from somewhere else apart from me, they may well have someone, but I'm always happy to recommend some people local to you if you'd like that. A fallout from the recent Uber decision in the Supreme Court. And indeed, there was one just a couple of days ago in Addison Lee, the taxi firm, another taxi firm that again went to the Supreme Court, is again that many more people who may officially be self-employed on their contract are actually going to be either an employee, a full employee of the company, or at least a worker, which is a sort of slightly subcategory of employee where you owe them most of the same duties except for unfair dismissal rights. And the Uber judgment really confirms what's been the very clear direction of travel in various different judgments and cases over the last few years, which is where you've got someone who's officially on a self-employed contract, but the reality is they work for your business on a regular or permanent basis. Then the law now says, when you're looking at whether they're an employee or not, ignore the contract. Ignore the contract if it says they're self-employed and look at the reality. And if they're working for you, helping deliver your services, working integrated in your business, etc., then the chances are very high indeed that they're going to be an employee or worker, and that then may cause complications in terms of minimum wage, holiday, unfair dismissal if you've dismissed them. So be very, very cautious with any self-employed relationships. This slot is too short to tell you a lot more, except that I recommend if you've got the slightest concerns, have your 15 minutes with me and let's just go through and see what's what. Or of course talk to your other advisor, because I think that the law is now in a really, really clear place that unfortunately, unless the person you're with, self-employed, contractual with, genuinely runs their own business with other clients as well, then it's likely that in law, certainly in employment law, they're likely to be your employee. Now that's not always the same in terms of their tax status, because the tax tribunal and tax law does run separately. And so you could get the confused position where your accountant's saying it's fine from a tax point of view, they're self-employed, but I might be saying to you, it's not fine from an employment law point of view. So bear that in mind. I know I've only got 5 minutes. I'm sure I've used them up. There might be some questions at the end, but I will finish my bit for just reminding you about your 15 minutes of free loveliness with me whenever you wish. Tim, you or anyone else has got any questions, then just fire away.
Luke, that was brilliant. Thank you very much. Yeah, my call to action would be exactly the same. Pick up the phone, talk to Luke. He's sat there waiting for us to call, and you'll get 10-15 minutes of his time for no cost. And hopefully most problems can be resolved in that period of time, or at least he'll give you an understanding of how to go about solving some issues. So thank you very much, Luke. Brilliant as ever.
Brilliant. Thank you, everyone. Take care.
Thanks. So next up, we have a very good friend of mine, and in fact, an ex-colleague of mine, Stuart Lotherington, known to many. Stuart Lotherington is Managing Director of SPR Consulting, who I think you all know by now are retained by the SPA to help SPA members in our sales training and managing our salespeople. So without further ado, I'd ask Stuart and his colleagues to give us a sales training update.
Thanks very much, Tim. Good to see you. Welcome everybody at the SPA. Thanks for inviting me over. We've got a very short presentation really just to announce officially that our connection to the SPA and being part of the retained team. It's great to sort of hear Luke and obviously the access you've got from a legal point. And it's interesting to sort of hear from Neil earlier that actually it sounds like everything's going really well. You don't need us. So it looks like our phone number is going to be really quiet and from the sales front. And it looks like the markets are going really well. You're booming. And it's up until May, June, maybe even July, where things might be able to settle down a bit. But if you are planning a little bit ahead and you want to start thinking, right, now is the time to start working out who are going to be our good clients, what are the best clients for us to work with, then now may be the time for you to consider actually looking at the sales team, looking at who's actually actively involved in that. And so we'd welcome you to come and talk to us. And then what's so fantastic is that we've already set up a couple of webinars and that have been well attended, some really good interactions and some lovely feedback for some of you that have already been on those. And we're looking to intend to carry on doing that. So let me just introduce to you the team. So in SBR, what we're going to have is dedicated 2 people resource for you and to make sure that we've got this 24/7 coverage, because we know you guys work mad hours. So Jason Walkinshaw, many of you have already met on previous webinars, and Craig's joining me today Both Craig and Jason have got over 10 years sales leadership experience, but they are sitting as the front men of a 21-person team at SBR Consulting, of which I'm in the background as well. So always looking and advising and supporting the team. What happens if any of the issues or challenges come up, they invariably come to our weekly meeting that we have inside and within SBR, and those are highlighted out to be able to draw on the fact that we've had 750 clients over the last 20 years that we've been working with. So I'm sure the issues and challenges you're facing, we've either overcome them personally or more than likely within the team as a whole. But just to give you a bit of an idea, we've got a wide range of clients we work with. So we don't just work within the sheep plant, as you can probably imagine. We've got a wide selection of organizations. Here's just a snippet of the 750 clients that we're working with. We probably, like you, have just had an explosive performance. So all I can say about that is that their organizations are really getting on the front foot as we emerge from the pandemic. And it is a good time to review it. What we're offering for you is an insight and be able to talk to either Jason or Craig, as I say, just a phone call or an email away, and can have 30 minutes time with us at any time you feel that there's something you want to share with us on that front. And to give you an idea, just a real glimpse of exactly the process that we look at, and something for those of you who've been along to our events, you will probably see this habits triangle that we share all the time with regards how we work with our clients. And this is just at the execution level. We also work with kind of the leadership teams and also at the senior partner, senior level team as well. And by all means, drop in on our website, sbrconsulting.com, to see more information. But just for the time we've got today, just to break down the fact that when it comes to our team, when it comes to our people, there's obviously a skills, our client engagement skills that works with the customer success team, as well as the account managers, as well as the new business teams. What has really been prevalent right now, it would fall under the systems, and that's just being able to organize and manage your accounts. It's also your personal organization, but also something that I know is close to Tim's heart and been the leverage to his success with his organization. It's just the data metrics, the activity metrics, and what are those looking like, and how are your conversion rates working for you at the moment. And if you're in a very good space right now, then this is the perfect time to be tracking those when everything's going well, and then people won't be so bad about it if it's already part of the habits they're involved in there. But also at the bottom there, we feel that they're all interlinked. It's probably a little bit more accurate to draw this as a Venn diagram. It's also the mindset and motivation. But the key thing when it comes to leading and performing, as we all know, you do this very well within your businesses. You do this very well when it comes to your manufacturing processes, but invariably it quite often falls down when it comes to the same accountability and tracking for the teams as well. So this is one thing we'd highlight, and just one of those models that we share the entire time. Now I'm just going to hand over to our superstar Craig, who's going to give you some insights on what we've already covered to date and your feedback. Craig.
Yes, good morning, and thank you for having us today in a brief time that we do have. I'd love to share just the webinars that we've ran to date, some of the insights that we were able to share from the learnings from being part of the SPA, and also some of the information about our upcoming webinars in the coming weeks and months. So the two webinars that we've held to date is adapting to sales in the virtual world. For many of us who have a long experience in sales, things have become drastically different on a familiar territory. As well as that, qualification and negotiation was an asked for topic. Thank you to all those that were able to attend. If you weren't able to attend either of those webinars, we do have a recording that we can give you access to. So just put in the comments or send a notification and we can get that to you. I'd love to share some of the how we see the current scenario, and also some of the solutions we've provided and what we can do going forward. So you may have noticed in the working in the last 12 months that the phone has near died, in that we're using the phone a lot less, and we are communicating through Zoom meetings and team meetings, and even through social media and the likes of LinkedIn like never before. So the way in which we communicate has changed. As well as that, there's been huge demand on SPA members. Conferences like this are just brilliant for giving the much needed insight required in order to navigate this situation. And then lead times have dramatically increased, meaning that we need to separate, as SPA members, we need to separate the wheat from the chaff. With the supply that we do have, what customers, which customers and which clients are we truly able to serve and pursue? And relationship selling is being challenged. For those that ultimately have built a business and built a client base on relationships alone, they are finding these times challenging. There was a survey done that we shared on a webinar that 700 different buyers were surveyed, and they were asked, what is it that you chose to work with? Why is it you chose to work with that particular vendor or that particular consultant? And the outcome was that beyond relationships, the business and the vendor was able to bring new insights and ideas. So bringing new insights and ideas is becoming more important than ever. And prospecting, of course, is totally different than it was. Some of the solutions that we've talked about in previous webinars and upcoming ones are the need to professionalize the virtual approach. That can come from everything from the camera setup, the background and all the basics, to actual communication styles when communicating virtually. Also, one of the most popular topics was adapting to client behavior. Not all clients are the same, and we identified 4 different types. That was driver, expressive, amiable, and analytics. If you would like to learn how to adapt to different client styles, then Adapting to Sales in the Virtual World webinar is the one to rewatch. And then again, conferences like today are excellent at sharing the details around the problems that members are having. What we cover in our webinars and our support services is exactly how to communicate that with your customers and clients. Qualification. We shared a qualification framework on our latest webinar, which was in TABO, which stood for Need, Timeline, Authority, Budget, and Obstacle. If you'd like to learn that, if you haven't seen it already, again, it's available in the webinar. And then with all the chaos and all the new factors that are part of our business that weren't there 24 months ago, there is a greater need than ever to follow a process and a structure and ultimately be sharper in the way we operate. That was covered in qualification and negotiation. And of course, different businesses see this differently. Some are itching to get back to the office. Some have decided that they will never be in the office again. And of course, there is the hybrid in between. Regardless, what we all know is that there is a great need to master the digital world. That is the general trend that we're looking to follow. So that's some of the things we've noticed and some of the insight we've been able to share. I'm going to pass back to Stuart, who's going to share a little bit about our support going forward and the upcoming webinar. Stuart.
Thanks, Craig. Yes, and just to wrap up, basically, so it's official now. We are here as the retained support for all the SPA members. I think Kate's just shared the access that you can go off for the webinars that Craig has already talked about. So please feel free to download those or have a look at those in your own time. We're offering a 30-minute sales clinic for anybody else. And the most exciting thing, of course, is we've got something else coming up to you, and that's how to maximize the power of both the all of those environments for you effectively on the 16th of June. So we're going to be providing some more insight on LinkedIn and details around how to be more effective on the social elements of sales. If you do want to reach out if something, an urgent need has come up to you, or we've just invoked a sort of a thought or an idea or just a couple of questions, feel free to email us on spa-sales@sprconsulting.com. We've got a dedicated email address for you so that there's Craig and Jason can pick those up. And finally, just to recognize that as well, that actually coming up later in the month, we have on May the 12th, specifically and exclusively for SPA members, we've got a couple of hours on how to really nurture your leads and get those all set up. If you've got an awful lot of work coming in at the moment, it's a perfect time to just really get things settled in and be able to make sure you have a decent digital presence, as we've already mentioned. But that's all from us at the team at SPR. So thanks very much for inviting us again. Look forward to seeing you guys on May the 20th.
Thank you, Stuart and Craig. That was excellent. Some golden nuggets from previous workshops there. And just to reiterate, if you do want to watch either of those two webinars or sessions. If you go to the SPA website, you'll need to log in as a member. If you hover on the resources section, a little box will come up, SPA members only video vault, and you will find both those training sessions in that video vault. So fantastic, thank you to SPR. We now have a supplier spotlight from valued supplier member Bezek.
Good morning, everybody. My name is Robert Jess, UK and Europe Sales. Over the past 12 months, Bezek have welcomed many customers from around the world to virtually view our comprehensive range of converting equipment. We would like to extend that invitation to all members of the SPA. If you would like further information or a live machine demonstration, please do get in touch.
Basic Machines has offered live virtual C170 die cutter demonstrations for over a year. Potential customers can schedule appointments by contacting any of our worldwide Basic representatives. Choose from Basic's in-house sample dies and sheets, or send us your materials and drawings to create your own custom C170 die cutter demonstration. Basic will provide you a Nelsonville, Wisconsin headquarters tour, a glimpse of all current activity of equipment builds in our shop, as well as a C170 die cutter demonstration for you and your group. Stack more and staff less with Basic Machines. Versatile, viable, valuable.
Great, well, thank you to Bezek for that spotlight. For those of you who have taken on BRCGS, we have our regular slot now. We have Robert Herridge from Packology Limited. He is our retained BRCGS specialist, and we're going to have a very brief, just a 5-minute slot on BRCGS, a little update from Robert.
Good morning, everybody. Well, welcome to the latest update on BRCGS packaging standard matters. I remember my first conversation with Tim a few months ago, where he said to me that members were struggling with and fearful of BRC packaging issue 6. I paraphrase slightly, Tim, but I think that was pretty much the message. Well, I'm delighted to say that a number of you have been engaging my services through the SPA to take advantage of the discounted member rate. And that's not what delights me getting a little bit of work, although it's always pleasant. But I'm delighted to report that of those sites I have visited to assist and have had subsequent audits, they have all scored AA grade certificates, which is the highest achievement possible. So well done to them. They know who they are. They put in the hard work. I just give them the pointers, because at the end of the day, I can never guarantee the final result, and it's quite often what happens on the day. And I haven't been present during those audits, so they've done that themselves, and they've laid all the groundwork in advance. In terms of matters anew with the BRC, there was a new clause, 1.1.2, which became effective the 1st of February, and this regards having a product quality culture plan in place. There is information on the BRCGS website as to what they're looking for. It's potentially a complex area. Some sites are perhaps a little bit overthinking it, but what the BRC are really looking for is a plan in place to ensure that quality is not a tick box exercise, and that everybody takes responsibility for product quality throughout the entire business. Most businesses, I would say, are starting with perhaps an employee survey, asking questions about whether the employees believe that the site puts deliveries ahead of quality, or quality ahead of safety, or whatever it might happen to be. And I do have a basic template that I can send out if anyone wants a copy of that. I believe there's a slide going up at the end with my contact details. But there is also information on the BRC website, and I would encourage you to use that because the auditors will also be looking at that. There are also 2 new position statements which are coming up. They have been released and published and are effective from the 1st of July. They are P616 and P617. And again, they are available on the BRC website. P616 relates to what we call functional packaging, which for the most would relate to things like barrier properties in plastic films. However, in terms of thinking of the functional packaging within the corrugate sector, and by functional in this circumstance, we mean over and above simple containment of product. If you had corrugate box which had been coated to provide a waterproof coating. There have been some boxes over the year which have been die cut and gusseted, and you can put ice in them and so on, and you'll say they're maybe waterproof for 2 hours, you put some ice in, then you put some bottles of wine or bottles of beer. Under this new position statement, you would be required to provide evidence to the auditor backing up your waterproof claim, or indeed any other functional claim that you are making. The second one is P617, and it relates to allergens, which is already covered off in the hazard and risk analysis. However, it goes to a deeper level, and it requires you to do a risk assessment for, amongst other things, whether there are any allergens within your machinery. So that may include things like latex rubber belts and so on. The simple solution is to ask your machinery supplier and use that to form part of the risk assessment. Section 1 of the standard actually states that sites will keep themselves up to date with any position changes that the BRC release. So it is entirely acceptable for an auditor at an audit next week to ask you if you know of any upcoming position statements. So these are the only ones so far which have been published to be effective this year. And as I say, they're from the 1st of July. So you want to hop onto the brcgs.com website and download those position statements. I think off the top of my head, they are both now at issue 2. There was an initial draft and it was changed by the Technical Advisory Committee and updated. So I think they're both at issue 2, although it does tell you on there which is the live status. The other thing that is upcoming, and it has been delayed until January 2022, is that each site will have 1 in every 3 audits unannounced as a mandatory requirement by BRCGS. BRC have stated that they are aware that packaging sites are not used to having unannounced audits, whereas the food sector is. So they're going to make it slightly easy for you. It will happen in the last 16 weeks of your audit window. So if your audit window expires at the end of April, then your unannounced audit will be sometime between January and April. And within that 16 weeks, you are allowed to block out 10 working days in which you can't be audited for holidays, etc. So it's essentially 14 weeks. So what you really want to do is make sure that nobody's allowed to go on holiday between the beginning and the end of those 14 to 16 weeks. Most certification bodies are telling their sites which year their 1 in 3 will be. Others aren't, and they're taking it purely as totally unannounced. So you might want to contact your certification body now and ask the question. as to which ones are announcing which year it will be, because then you can breathe a sigh of relief for the following 2 years. I would say that in terms of being able to cover the resource for an unannounced audit, you essentially need, as a worst case scenario, 3 people who can cover the standard. So you may have somebody who is fulfilling the function of being the BRC manager at the moment. They may be off sick, their child may be ill, they may be away in a training course that can't be moved. So you need to have a stand-in. The standard does require that you should have a deputy for BRC, but their car breaks down. And, you know, stuff just happens. And boy, does it always happen on the day of the audit. So worst case scenario, make sure you've got 3 people available. Usually anyone can do the production tour, but it's knowing where all the procedures and documentation are hidden within the various folders. If the auditor doesn't get to see the evidence on the day, then it's a non-conformance, even if you had it and it just couldn't be located on the day. It may simply be that you want to have a kind of crib sheet listed out clause by clause for every clause of the standard, written by the person who currently manages it, so that you can just hand it to anyone to be able to run that audit. The unannounced audit requirements also require that the auditor is given access to the production area within 20 minutes of arrival. This is so that you're not running around announcing the unannounced audit, sweeping the floors, painting the walls, etc. Next point is the standard says in section 3.7 about approval of suppliers, that if a supplier gives you a copy of their BRC website, their certificate, you should not take that at face value and you should check it on the BRC website. And the main reason for this is there is, not so much in this country, but certainly Eastern Europe and further afield, trade in counterfeit certificates. But of course, the question is, how do you evidence to an auditor that you looked on the BRC website to check out somebody's certificate? And this came up in an audit recently. So what I do is I advise everyone to check their supplier certificate on the website, then take a screenshot, print it off and put it in your supplier approval folder, staple it to a copy of their certificate if you want, and then you can demonstrate that you're compliant with that section of the standard. The last thing that I think everybody should be aware of is that due to the additional clause 112 that went live in February and the 2 new position statements, and the fact that there are about 45 more clauses in issue 6 than there were in issue 5, although the BRC audit duration calculator still says most sites will have a 1.5 day or 12-hour audit, most audits are now taking 13, 14, 15, 16, and I've even seen 19 hours, and some certification bodies will charge you extra for that. Most of the certification bodies have put it in the small print of the quote that they send you for the audit, but just to be aware. And the reason that they're doing that is basically the auditors are only paid for 1.5 days, but some of them are end up working 2 days or more, and the certification body needs to recoup that cost to pay the auditors. I'm sure that plea will fall on deaf ears, but there you go. There is work underway with the certification bodies and the BRCGS directly to look at increasing the audit duration. Very strangely, there's a new issue of the storage and distribution audit that goes live on the 1st of May. And whilst it's got 25% more content, it's been reduced from 1.5 days to 1 day. And I have no idea how we'll get through those, but they don't relate directly to packaging. So it is not our concern today. I think that's pretty much it for today's update on BRC matters. And there we have my contact details for anyone that needs them or anyone that doesn't have them.
Thank you very much, Robert. That was great. There's Robert's details on the screen there. Next up, we have another supplier spotlight, just a quick 2-minute introduction to Signode. Thank you very much. Okay, I was watching the television this morning quite early on, and it seems to be award season. Well, we are no exception here at the SPA. Each year, our converter members are asked to vote for their Supplier of the Year. And last year was a very difficult year, but we did manage to get the poll done, and the results are in. And we are going to announce the Supplier of the Year award in traditional fashion, in reverse order: bronze, silver, and gold. So, ladies and gentlemen, it is my great pleasure to announce that the Supplier of the Year Bronze Award goes to congratulations to Siegwerk, that's fantastic. And our Silver Award goes to congratulations to Bob's. That's fantastic. Now, this is the moment you've all been waiting for. I'm sure there are plenty of suppliers there looking very nervous, gripping their cup of coffee rather too tight. The Gold Award this year for the SPA 2020 goes to Board 24. Congratulations to Board 24. Not the first time they've won the award, and possibly won't be the last. But during a very difficult year, they have performed well and have been highly recommended and commended by our members. So congratulations to Board 24. Moving on with the agenda, you'll be glad to know we're on the home straight now, which is wonderful. We're very fortunate to have Andy Braun, who is Director of Health and Safety for the CPI. And we've asked Andy to come and talk to us today about the benefits of collating and sharing accident and injury data. So a very warm welcome to Andy Braun from CPI.
Thank you, Tim. Afternoon, everyone. Right, let's share this screen, shall we? So as Tim said, we've really been asked today to just give you a bit of a update, if you like, on what CPI does in terms of collating data, and just to share with you perhaps some of the things that we feel are benefits of sharing information. And hopefully by the end of this very short, and it's a very short presentation, that you will think about how you gather the information, how you, I think more importantly, share that information amongst the industry so you can all learn. So let's start this screen. So where are we? Okay, so hopefully everyone can see that now. Yeah, excellent. Got the thumbs up from Katie, so that's good. Okay, so as I said, very, very briefly, we'll just go into how we collect data, some of the benefits, and the question of next steps is really one for yourselves as members of SPA, and I guess for SPA themselves as to where you want to go with this. So first thing, well, collating data, the first thing is actually it's a legal requirement. As I'm sure you are all aware, and there are certain categories under the RIDDOR regulations that require you to report injuries. I'm not expecting you to read this or go into any detail, but I think the key things are we have specified injuries, which are your majors, your fractures, amputations, those sort of things. Over 7-day incapacitation, where someone has an accident and they can't work for over 7 days, self-explanatory, I guess. And the third one, although it's not reportable under RIDDOR, it used to be, but it's no longer reportable under RIDDOR, is where someone is off work for over 3 days. And I think the important thing here is that you still have to record it, put it in your accident book. So it's a legal duty to do that, but it's not a legal duty to report it under RIDDOR. So as you said, so everyone has to report certain types of accidents. Within CPI, we use this information and have done for many years now. I mean, I've been with CPI an awful long time, and before that, when it was the old Paper Federation, and going what nearly 20 years, I guess, we've always used this information, which is really good intelligence. It's lagging information, it's lagging intelligence because something has gone wrong, but we use this really to determine where we want to go as an industry. And I guess as individuals, as individual sites, then these are good things for you to look at in terms of how you want to improve and the lessons that you can get from these. So we get all this information on a quarterly basis. What do we do with it? Well, this is an example. What I would say at this point is we collate an awful lot of data, and I'm not necessarily, well, I'm not going to show you everything that we do. That's not for commercial competition reasons at all. It's because we gather so much intelligence these days that we've extended. I just want to share with you some of the basic things that we report, and I would encourage you to do this going forward. So that RIDDOR information that I've just spoken about, we pull that together, and every quarter we gather that information and we circulate it to our members. So we take the number of employees working in the corrugated sector or CPI members. We categorize all of those figures there, the specified, the over 7 days. We come up with an injury rate. So we put all those numbers together, divide it by the number of employees, and we get an injury rate, which is important because this is what is measured by HSE as well. And the other thing that we do is we then, in terms of how the severity of an accident, in particular where someone is off because it's over 7 days, and some people certainly at the moment, now that we're looking more and more into health issues and issues around anxiety and stress, which is another measure that we are now starting to look at, the number of days is significant and hours lost. And as you can see, this enables us to plot where the industry is in relation to the HSE. And a couple of points on this is the number, sorry, the dark area, the specified. So these are the major accidents. So as you can see from that, over time, we've probably, we improved. Went through a bad stage sort of from January 19 up until more recently, start of this year. And hopefully we're going to start seeing that trend come back down again. If we were to go back to sort of 2000, so we've got sort of 20 years of data, believe me, this graph will be off the charts. It would be, and I think back then we were looking at about 16 to 1700. It was huge back then. So this is why it's important to gather the information and work together. So collectively as an industry, you can see an improvement. So that's a very basic, diagram or chart or graph, sorry, of how we measure and compare ourselves with HSE manufacturing. And as it stands at the moment, we're doing okay. we can always improve, but at least we are, you know, we are better than the average for manufacturing. The other thing that we can look at from that information, just purely from those riddles, is the type of accidents that we are seeing across the industry. Not surprisingly, slips and trips is always up there, as indeed is manual handling. Contact with machinery is one that we have good years and we have bad years. And the thing is, for me, is every year should be a good year and we should be improving, because we invest so much in machinery. And when we look, and when I've spoken about this before, when we buy machines, we need to make sure that they're safe. And one of the things that we do with this data is we look to see the types of accidents that we are having in these certain areas. Struck by object, so on and so forth. The others is that sort of catch-all category. So this gives an indication of the type of accidents that we're seeing on a quarterly basis, whether we're improving, and it also determines the areas that we want to focus on. So through PABIAC, Paper and Board Industry Advisory Committee, through CPI, we will look at these and say, do you know what, we need to start doing more on slips and trips, for example, and we will target things. We need to do more on contact with machinery, which we've now developed procurement policies for it. We work on standards for lots of machines to improve safeguards on standards. And we really focus on those areas. And that intelligence enables us to do that and measure how successful or conversely unsuccessful we are, I guess, in these areas. So that's the other thing. The second point is on the injury report. So every quarter, when companies send in their information, we get a brief narrative of what actually happened. And this, for me, again, sharing of information, this is good intelligence, because just looking at this one here, and I've highlighted that one in particular, but looking at this, I can see that, you know, there was a dispatch operator at 6 o'clock in the morning. That's always a good tell. You know, 6 o'clock, you know, perhaps when the managers aren't in sight, you know, was it the end of a shift? I don't know. I don't know the detail, but all I know is that, you know, at 6 o'clock on the 6th of July, a factory worker fell over and fractured his ankle. All the way down to the bottom, we have a contact with machinery accident. So it gives a brief narrative about what happened. And unfortunately, on this occasion, the engineer lost the tip of his finger. We take that, and what I will do then is, having shared this, I will go back to the company and say, look, you know, this clearly you know, a serious accident here. You know, what else can you share with us? So what we've started to do more and more, and again, I would encourage you to do this because these are becoming very popular and incredibly useful, is what we call significant potential incidents. This is an actual incident that happened, but let's go on to the next one. So we will turn that into more information for members, so they can look at that and say, okay, what actually happened? And this is supplied by the company. You know, and I understand there are potential legal implications for sharing things, but I think in the spirit of making sure that people are not injured, and that's what this is about, we make sure that people that work in our industry are not injured and we can learn from other people. So in this instance here, you know, we found out more about what happened, is where the engineer actually put his finger on the motor there, and because of the hole that was in there, it hit the rotary blade. And more importantly, we come up with a solution as well. So on the right hand side, that's just taken from the standard 13857. So that will tell you that actually for a hole, for a gap that small, what you should have in there to prevent it from happening. So this is what happened. I get this information, I go out into the workplace and I look, can this happen on my site? And that's all we are asking you to do. But in order for me to go and have a look at that site, I need everyone to start sharing that information. So this is why it's important that we share information, gather the information, analyze the information, and share it for everyone. HNS is non-competitive. It really isn't. You know, it's in everyone's interest really that they do share this. I mean, in terms of the benefit, a number of things. One, I always think, you know, while we're looking at lagging indicators here, I think one of the benefits is no matter what you have as an accident, you should be looking at it and saying, this isn't going to happen again. So what do I need to do to make sure it doesn't happen again? The other thing is it enables you, whether as a sector or as a site, or, you know, or a company, if you've got a whole range of businesses, to look at the key areas that you really should be focusing on, the areas that you should at the start of the year or whenever, when you put your action plans together, what are the areas you want to focus on here, and target specific areas, whether it's machinery, whether it's slips and trips, maybe just a couple of those things, the ones that are going to be the biggest cause of, have the biggest impact for you as a business, whether it's financial, which is probably could be maybe through a prosecution or something like that, or maybe just because of staff. You know, if you can't replace staff because you don't have many people, employees working, and you can't afford to lose 2 or 3 people, yeah, that can have a huge impact on you. The other thing as well is that in terms of the benefits, no one site is bigger than the industry. You know, and we have some big companies, big members within CPIs. I'm sure you have within the Sheep Plant Association. And when the HSE look at companies, they tend to look at the industry. So if you can be best in class, you could be the best company in the world, but if the rest of the industry is performing badly, then you will be targeted as well. So it's vitally important that the whole industry works together on this and starts sharing more information so that everyone can improve together. And we help each other as well. Again, it's about help. And finally, the other thing about HSE is they want industries these days to really be a lot mature when it comes to managing health and safety. And they actually want to know that as an industry, we're doing the right things, we invest in the right areas. H&S is clearly high on the agenda, and they allow us to a degree, we're not above the law, to set our own agenda. So we're not driven by HSE, we're not targeted. I mean, within membership within CPI, we have the recovered paper sector, and they are, because they fall within recycling, they are a target industry to be looked at from HSE. You know, so they get visited a lot. You know, we've managed to do a little bit in terms of on the paper side of things, but what we don't want is HSE to start coming into your plants and telling you what to do. You know, this is a good way of benefits of sharing information, helping each other, so the whole of the industry can be seen by HSE as managing its own affairs. And I think that's in a 5, 10, 15 minutes, that's pretty much everything. Now I've put, say, the next steps really is really about what you want to do as a sector, as an organization, SPA, and I guess as members as well. So first and foremost is it's leadership, engagement and collaboration. I would suggest the first thing is, as a company, are you prepared to openly share and reveal all, you know, and it can be a little bit unpleasant, but it's good to reveal all and share information so that everyone can learn. That's the first question, I guess, for everyone. And secondly is, if you're going to do that, what are the mechanisms, what things do you need to have in place? What I've shown you today is it's really just a snapshot and a starter for 10. There are so many other things you can do going forward, but maybe just to get the ball rolling, just an agreement that actually we're going to start sharing some more information on health and safety, and certainly the SPIs as well. I think that's it, Tim, for me. Unless there's any questions, I'm happy to answer.
That was excellent, Andy. You make a very, very good case for collection of these stats and using them. And clearly prevention is better than cure. So no, it's great that, and I reassure you that we will ask members how they feel about sharing in the way you've described, and we will pick it up as a committee to make a decision on how the SPA can take advantage of what is clearly a very logical way of collecting stats and ultimately stopping accidents from occurring. So brilliant. Thank you very much, Andy. That was very concise and very informative. Thank you very much indeed. Okay, We have now a very short spotlight from a new member of the Sheep Plant Association, which is always good to see, so something you may not have seen before, a short spotlight from Hybrid Software.
Corrugated printers do not typically make their flexo plates. However, the digitalization evolution in the press room generates also the need for in-house pre-press tools. In this movie, you can see how Hybrid Software's PDF editors, packs or steps are automating the process of supplying print-ready files. While doing my introduction, I have applied registration marks using technology that dynamically distributes and colors these objects in accordance with the press requirements. I highlight multiple areas on the corrugated box that should be enhanced on the digital proof that is typically used for customer sign-off. Here, I show how you can decorate the proofs by making a link between an ERP system and packs. This increases the efficiency and removes chances of operator errors. Hybrid Software's PDF editors have many imposition and step and repeat solutions. Here I load the cutting die that is used by the finishing machine and apply the signed-off artwork in the stations. I continue with applying station numbers, bleed, bearer bars, and I send off an optimized file to the front end of any digital press. Talk to Hybrid Software if you want to know how our dedicated corrugated tools and softwares can help your business to navigate in the digital world.
Very good. Thank you for that from Hybrid. Now, we've been doing these virtual events for some time now. This is the third. I guess the big question is, will there be a fourth, or will people be confident enough to contemplate meeting in person? So we do have a poll now, which it'll be an open poll for the next week. So we will collect data today from you guys, but we will also make sure that everybody who isn't on this call today gives us an answer. So given the choice, would you wish to meet virtually or physically, that is face-to-face, for the next SPA conference in September? Now, I know this is a bit of a crystal ball moment, but would you like to meet virtually, physically face-to-face, or at this stage, are you still unsure? Your feedback will be plugged into the SPA committee brain, and we will play out the members' wishes in this respect. Okay, so I have done my result or my vote. So if you could do the same, that'd be great, and we will make sure that we get feedback from members that aren't here today. Good. Next up, we have Andy Broad's colleague. We are very fortunate to have Andy Barnettson with us today. We are very fortunate to have two presentations from CPI. Now, Andy is doing some fantastic work with the promotional committee, as you all know. So Andy would like to give us an update on that, and also some important information which does affect us all about extended producer responsibility. So Andy, over to you.
Thank you, Tim. Hopefully everyone can see and hear me okay. Yes, good afternoon all. Regular now at these conferences and very pleased to be back. Thank you for the invitation. I normally talk about the promotional work, and we've brought you some good news. But what I'd like to do today is start with something slightly different. And that's the packaging regulations, because these are changing. You'll all be familiar, I'm sure, with the packaging regulations. Government calls it producer responsibility. Basically, at the moment, it's a simple enough system. You need to know how much packaging you're putting onto the market. You probably join a compliance scheme. It's probably Valpack or Paperpack or someone like that. They buy PRNs for you, packaging recovery notes, and it's all done at pretty low cost, a system that was designed to be favourable to industry, dating back to the late 1990s. That is all going to change. Local authorities have been complaining for some years that they are picking up the cost of managing packaging waste. Government has listened to the local authorities and various NGOs, and the proposal is that packaging supply chain is going to pick up the total cost for management of the packaging materials they're putting onto the market. They're calling it producer pays. And if you haven't heard this term before, you will hear it again, EPR, extended producer responsibility. And basically it means that when you and I throw away packaging into the curbside collection for recycling, that cost will be covered by industry. When packaging is recycled out of businesses, that will be covered directly by the packaging industry. When litter, packaging litter is dropped in the countryside or in the street, that cost will be picked up by industry. And as you can see from my first red figure there, the cost to packaging supply chain is going to be something of the order of £2.7 billion, up from the current 80 to 100 million pounds. So that's a 30 times increase to the packaging supply chain in terms of cost. The good news in this, if there is any, is that that should fall to the brand owner, the importer, the specifier of the packaging, essentially your customer. But we can expect some cost pressures. You will appreciate better than me the sort of cost pressures that may follow if your customer is suddenly facing a 30 times increase for their packaging regulations. Bear in mind two other things as well, please. Firstly, having said that this will fall primarily to your customer, there are occasions when it will fall directly to you. And that's if you're supplying to a customer who is under £1 million. If they fall below what's called the de minimis, this £1 million turnover, they will not be obligated, and you as supplier will be. Finally, and as you can see, there is a very clear preference for reusables throughout these documents, these consultation documents, and we have to face a real challenge that reusable will be preferred and promoted over single-use packaging. This is all just proposals at the moment, but it is very likely that some part of this will go through. Two other things that I want to mention, they are of less criticality, less detail for you, but I want you to be aware, please. Firstly, a separate consultation in addition to EPR is DRS, the Deposit Recovery Scheme. Be aware that if this goes through, then within 2 or 3 years, we will all be paying an extra 10 or 20 pence on the containers that are within the DRS. This is glass bottles, this is glass cans, this is tin cans, your baked beans, your can of beer, your glass bottle of beer, your Coca-Cola, whatever it is, glass, plastic, metals. We will all be paying 10 or 20 pence more and expected to take the bottle back to what's called a reverse vending machine at the supermarkets to get that deposit back in full. Clearly, it is intended to reduce litter, but we do recognise this could have an impact on curbside, and this is where it could have the indirect effect for us as paper packaging. We are not included directly, but if all of these materials leave curbside collection and suddenly paper packaging, your corrugated cardboard Amazon delivery, your paper cereal box, whatever it is, if paper packaging suddenly rises as a percentage of curbside, then the EPR costs I mentioned a moment ago could be much greater for your customer. So DRS, indirect effects. Finally, again, for your information, there's a series of webinars running on what's called eco-modulation, and this is a sliding scale of fees based on recyclability. And you may think that paper packaging, cardboard, corrugated would always come out well. Yes, we hope so. But we can't assume anything because you can guarantee that nobody out there wants to be classed as bad for recycling or not recyclable. Everyone will be fighting against that. So we have to make sure we remain at the top of the pile. So I've been through the 213 pages of EPR and I've been through the 103 pages of DRS. Other colleagues within CPI are going through all this as well. We're hosting a series of meetings. One took place last Friday. A further takes place on the 12th of May. We really do need to make sure that we've got decent industry input into what I think is right for the industry and what other colleagues within CPI think is right. Unlikely we can change government's mind about producer having to pay. Almost certainly there will be significantly on costs for the packaging supply chain overall, but we can hope to bring some practicality and reality to it. So just to conclude on EPR, there will be significant on-costs across the supply chain. There is a preference for reusables we have to face. I will tell you more about this as this develops, not just at next meeting, but over the next 2, 3, 4 years as it becomes clearer. If you do want to get involved, then you are very welcome. For the first time today, there are my contact details. Contact me directly if you want to get involved and learn more, but please, not just if you want more information, that will follow. If you want to discuss this, then please be ready for the technical detail. Now to my usual topic, and hopefully a little bit more light-hearted and better news. The Beyond the Box promotional campaign to the consumer continues strongly, and I'm grateful to SPA both for your financial contribution and to the resource that you put into the management of the committee. Very briefly, through 2020, we had a lot of projects, a lot of great success. You can see the specially made pizza boxes top left, the approach to a youth magazine in First News. We did radio interviews. We had a Vox Pop video that was very popular. We engaged with artists Paper Boyo. And then in Q4, we commissioned a bust for our environmental hero, Sir David Attenborough. And in 2020, overall, we reached some 360 million potential audience. So we're really making some big waves. Q1 of this year, now complete, of course, we shook things up and we ran our Vox Pop video in Q1 this year. Conscious, of course, that we're still in lockdown, conscious that people are feeling a bit depressed about it. We looked at people's opinions when it came to recycling. And we find that people actually enjoy recycling, they actually enjoy flattening that cardboard box and putting it in the blue bin. And we went out with this Vox Pop video, Associated Consumer Research and press release and so on. And we went out with Going Green to Banish the Blues, all in time for the International Day of Happiness. That video is available online. Again, contact the exec committee or me direct if you want to see it. But we had 11 pieces of coverage, 8 of them in the national press, and that alone got us out to an audience of 137 million. And then we've been posted on 150 regional news websites, which takes us out to a further 30 million. It's all a potential audience, we never know for sure, but that's 167 million already in Q1 who've seen our messages. Our website for Beyond the Box is cardboard.org.uk. You can see the link there if you want to follow through to the video, /news/BritsGoGreen. But as I say, contact the exec committee or contact me direct. Other big news at the moment, we've just gone out live on our own social media channels. Beyond the Box is now on Instagram and Facebook. In both cases, we're Beyond the Box UK. So if you're in those formats, then do track us down. We've got a great deal of success early on. It's only been live for a matter of weeks, but already going strongly. So some good results there. I hope you're pleased with that. Again, thank you for your support, both in terms of finance and resources. I'm out of time. Once again, abarnettson@paper.org.uk. There's my mobile number. Contact me via your SPA exec committee. Ask me questions. Do get involved. Delighted to help if I can. Many thanks.
Andy, a consummate professional as ever.
Thank you.
To time and to point. Thank you very much indeed. That's great. We're getting towards the end of conference now. Can I just urge people to stay connected until the very end of conference? The last spotlight is from a new member, and I think is very, very exciting and interesting for sheep plants. So please do stay on. That is my teaser. I'd just like to thank at this point our sponsors. You know, this event wouldn't be possible without VW Paper Systems and Isra Vision. They've done a great job in supporting us today. And it was great to see so many first-timers at conference today as well on a try before you buy membership basis. We look forward to seeing you all next time as members. That would be wonderful. 3 reminders for dates of events coming up, which are for SPA members. The SPA SBR Virtual Selling Workshop, that's winning business through social media, free of charge. Get all your salespeople, your sales managers, sales directors on that course, as many as you like, free of charge on Thursday, the 20th of May. It's pretty sharp. It lasts for 2 hours, but an absolute must go to. Also, the mental health first aider course is coming up shortly, May the 4th and 5th, and May the 11th and 12th. There are still a couple of places left on that, and the SPA are funding half of that course for you. So that's a reminder for that. and also the SPA's 4th online conference, or perhaps physical conference, yet to be decided, Monday, the 20th of September. Okay, so please stay connected because our last spotlight is from the very clever people at Konica Minolta, who are new members new members of the SPA. It's an exciting new offering, which I think is going to hit the sheet plant market hard. So a very exciting spotlight from Konica Minolta.
On a global scale, the packaging industry is a massive economic generator, with a steady growth for the past decade. What's driving this performance? First, buyer preferences towards personalization, convenience, health, and affordability. Second, sustainability at every step of the value chain. These are solid trends, but the strongest ones are digitization and Internet of Things, resulting in increasing integration of technology into packaging. And finally, e-commerce. It's literally everywhere. Embracing these trends definitely requires a new approach. If you want to go full color with your boxes on board, aiming for a wide variety of markets, including food and food delivery, beverages, healthcare, storage in general, gifts, and many other, you should seriously consider this printer. The PKG 675i from KMBS is a flatbed digital corrugated printer that prints directly onto coated and uncoated corrugated board, pre-cut folding boxes, and craft cotton. It's so fast, easy, and affordable to operate that any print service, brand manufacturer, logistics provider, including e-commerce players, will profit from exceptionally fast print speeds at high quality and low cost. It features 5 single-pass color inkjet print heads with memjet technology and 4 color CMYK water-based inks. The key to great print output is great design, so it's important to understand what stock you will be printing on before the design process starts. A caldera rip for file preparation is required, but executing a print is as simple as printing on any desktop printer. Maximum media width is 47.2 inches with a 41.9 inches print area. Media thickness must be thin as 0.02 inches and 0.63 inches thick at most. Print speeds can go up to 11.8 inches per second and the resolution up to 1600 times 1600 dpi. One operator is able to perform all tasks. In just 1 hour of work, you can get a full pallet of beautifully printed boxes. For higher quality results, coated media is required and the output will be light-tuned. With the option of further lamination or varnish, high water resistance is obtained. Exceed customer expectations and reach new markets with unique digital corrugated print solutions.
Giving shape to ideas. Konica Minolta.
Well, fantastic. That draws to a conclusion proceedings for today. Thank you very much for attending, everybody, and we will see you next time.